we should pretty much be closer to all-time highs now that we're opening. I think we're opening closer to the highs for the days. These are all-time highs that you're looking at. We're up about, what are we? 22, 270. So where our previous high was about, what was it? 239. So we're going pretty much higher right now, 6.8, right? So we're going to be opening into all-time highs. So congratulations for everyone that's looking forward to this day. Anyways, we're just going to wait for a few people to join in. You should be also seeing the live come up pretty soon. Also the poll. So go ahead, vote in the poll. Make sure you guys make your decision on that. Let me go ahead and get a few. Okay, so at the moment, everything that I'm looking at looks pretty good. I am able to see that the markets would open in the green, pretty much closer to all-time highs. So nothing to really worry about. We're good to go. I'm just putting the link up on Twitter so everyone joins in from there as well. Let me go ahead. Let me just put it out there. So this one's going to be fun. I mean, I'm actually looking at this more from a do we break and sustain, or do we just slightly break and then head back lower? Now, could be any of these things, right? We will know pretty soon now. Today, we should open into the all time high territory. So let's see. It's going to be fun. Whatever it is, it's going to be fun. All right. And I'm able to at least know one of the things that's currently going on is with the ceasefire that took place, it does look like the market would head higher. We should head monumentally higher, at least according to me. Okay, let me just hold up. Let me try seeing if we can go ahead. Maybe if we can get a few people to tune in and then we can begin. 22 to 65 as of now. Few of the stocks are that are looking pretty good. Reddit is up about 4.3%. So that's been going pretty well. Reddit is flying. I don't know for what reason. Let me actually go check why it is actually flying. But I decided to do this a little bit earlier than usual purely because we are going to open into all-time highs. We're going to get a lot of people coming in, a lot of people talking about this. So go ahead, everybody say hi in the chat. I want to know who all is here, and go ahead and vote on that poll as well. For everyone that's new, go ahead, subscribe. I'm doing this pretty much every day, so I'll appreciate a subscribe from you guys. So go ahead, do that for me. And yeah, so markets are going to be higher. We're all going to be making some money today. So it's looking good. 4% higher on Reddit. You're looking at about 1.35% higher on the trade desk. So tell me, what all stocks do you guys own? What's currently in your portfolio? What is your biggest investment in 2025? And what's also your biggest gain? We had a few the other day. Robinhood was the best for a few people. For another people, it was different. Devi Fatma's in the house. I'm from Indonesia. That's nice. I'm in Indonesia at the moment. I'm in Bali. So I don't know why it's raining so much here, but it is what it is, right? Yeah. I decided to go to the beach today and got drenched. But yeah. Anyways, thanks for tuning in. Make sure you guys subscribe, please. And yeah, so let me go see actually what the hell is. So there's an IPO that came out, right? The Chime IPO that came out, and that was up about that opened at about 44. The IPO took place at about 27. So 27 went all the way to 44, and then 44 has come crashing down to about 29 as of yesterday. So it is looking pretty weak. The markets for Chime are looking weak. I think maybe there might be a reversal. The stock's up about 2.52% in pre-market. It'll be fascinating to see what happens with this particular stock, right? Whether it's able to turn back head higher or whether it's just languishing right here, right? So that's something that I want to keep a watch on. Let me go see what's happening with our poll as well. I'm going to talk a lot about markets, about the way the markets have been around all time highs. So stay tuned for that. How do they react? What is it that happens? I have a few pointers as well. So it's not going to be all throughout just me talking about that. But I want to know why. I want to explain to you guys why all time highs is never a sell signal, why breakouts they take time, so you usually grind higher rather than just breaking out altogether, which is what's happened, right? If you know what I mean. Past few weeks we've been trading right around these ranges, 2% lower, a percent lower, a percent higher, around these places, but we've not been able to break out except for today. So today's special, we're breaking out and most likely going to be opening in pre-market at a new high. I don't see, unless and until Donald Trump decides to come in and tweet and screw things up, or someone decides to do something in the Middle East, we should be on our way to new highs for today. And do remember one thing, every bull market requires the previous high to be taken out. So if we do actually take out the previous high and sustain for the month, which is another few days, if we sustain for the week, which is also 2 more days to go, and if we sustain even for the day, it means we are signaling to ourselves that a new high is being formed, a bull market is beginning, and This is something that is bullish for most stocks, and this is my bet. I actually do believe that the Russell 2000, which is the small cap index in America, is going to do better than most other indexes. They have a catch up to do, and I actually believe this time, the next 6 months to a year, is going to be the catch up phase. Anyways, I appreciate everyone joining in. Thank you for doing that. Just go ahead and say hi so I know who all are here and what's been going on right now. Let me also go ahead and see if everyone from Twitter is here as well. So we're going to be getting a few folks coming in from Twitter as well. I've put out the link there. So this is currently going on. Let me also just see 22,268 right now on the Nasdaq. We don't have any data coming out, so I don't want to be wasting our time today talking about data. I'm purely going to stick today to talking to you guys about how is three to four things, right? All time high is not being a sell signal. Why don't play the fear of missing out? The FOMO trade, it's not going to work. It does not work. Wait for the pullback. This is how bull markets are. I would generally suggest wait for the pullback. It makes a lot more sense to wait for that. Three, I want to talk about what typically happens to the market after we break out from an all-time high. So that is important, right? Remember that. How do we break out from these prices and how do we react then? That is the important factor. And more importantly, the last or second last part that I want to talk about is earning season, which is coming pretty soon. You are going to be seeing a lot of these Nasdaq tech as well as the banks starting off with the earnings season. So you're going to be seeing the role of earnings and what is the role of earnings in sustaining all-time highs. That is more important. How is the earnings season going to play out will determine whether we have a sustained bull market. Let's also talk about a few more things today. We're going to be talking about how inflation, oil, or interest rates can spoil this market because remember, the higher the market goes, the more I like thinking about the fact as to what is it that's going to take it lower. I'm not interested in what's going to take it higher because everyone's already interested in that. I'm interested in what's going to take it lower. If there are enough things in my head to realize that the markets can go lower for a particular reason, obviously you guys will know it on the live, but irrespective if it is that case, I will start lightening up my positions. I start selling some of them, I start selling them into strength and building cash reserves for the possible pullback that you do get in bear markets, which make you believe that you are entering a bear market. So really, that is something that I am actually looking at. It is something that I want to continue to look at. Three things: inflation, oil, and rates. These are the three things that's important. Another question that I did get asked yesterday was do you buy, sell, or wait when markets are at all-time highs? So we're going to answer that question as well today. So it's a longer session this time. It's just me, no Sean, no Nikhil. They're busy. So that's that. And more than likely, if you guys can hear me clearly, just drop into the chat and let me know if you can hear me. We got Wage Freedom in the house. Nice to see you in. He says, man, I've really got to hand it to you. You called this upswing 20% ago after the tariff washout. Very few people were bullish at that point. Great call. Thank you so much. I mean, I will take credit for that for sure because we were able to even make money on that move higher. Let me address that point today because today seems like an opportune moment. When you do rally from the lows that we have seen all the way up 25% and now into a new high altogether, and this is an all-time high, right, for the Nasdaq. The S&P also eventually will head into an all-time high sooner rather than later. We're about, I think, 0.5%, 0.8% away, right? So eventually that thing's going to play out. But one thing I do want to let you guys know is that do remember that I've been saying this before. When you have a particular level that the market has respected and then collapsed, either a pullback or a bear market, the next time when you retreat back and hit that level, you do not just hit it and stop there. You break above that level and substantially move higher. Go back in time, look at the 2022 bear market. You saw the markets come down. In 2023, we broke above that and we had a 2 year bull market all the way to 2025. I'll give you the numbers if you guys don't believe me. All right. The bull market in 2022 ended at about on the 22nd of November 2021, the bull market ended at 16,585 on the NASDAQ, right? Seems pretty far away right now because you're talking about the NASDAQ currently hitting 23,000. But 16,500 was the number on the NASDAQ in 2021 November, right? For all of you that don't know what the NASDAQ is, it's the top 100 tech companies in America. Just buy the goddamn ETF and sit, and your kids will be happy. Anyways, let me cut to the chase. You broke down 37% from there in a matter of 407 days. That's about a year, right? About a year and a month, here and there. So that took away about 37%. And that was the bear market that you were in on the NASDAQ. You know how long it took us to recover from that? So we bottomed somewhere around 3rd of January 2023. November 2021 all the way to 2023. It was a long bear market. You went all the way from, that was a low of 10,700. It took us a period of almost a year, just a year, to go back 6,000 points on the NASDAQ. From 10,000, we went back to 16,000. That is a 60% move in a year at the end of a bear market. So do not believe when someone comes and tells you that, hey, just because the prices were lower, 25% lower, and now they're up 20% from the lows, we're done and over with, and the market's going to come down just because, when you break into all time highs, you always see selling. You might necessarily see 2 to 5% selling. That is par for the course. If you can't digest 2 to 5% of a selling, remember you're in the wrong industry. So please go and look at that. Here's what happened. The breakout happened at 16,600. The market never stopped until it reached 20,700. That is 4,000 more points. That's a 25% gain at that breakout price. So from an all-time high, you went 25% up in a straight line. Let me actually see how long that took. 22nd Jan 2024 was when we broke out. And by July, we were already in 20% of a rally. So just saying, guys, please don't believe everybody that's coming out and saying that, hey, be circumspect about what's going to happen, be worried about whether this rally is going to sustain or no. These kind of things are a joke. Don't waste your time. Look at the price determines everything. Remember that your profit and loss is determined by your price. Your profit and loss is not determined by anything else. All of it is determined by the price of the particular stock. If the price of the stock is higher, you make money. If the price of the stock is lower, you lose money. It's plain and simple, right? You don't need to be an economist thinking whether I'm going to get things right, whether the economy is going out down a cliff, whether it's not, all of that. It's all nonsense. Don't waste your time in any of that crap. It's not worth spending your time on that. You don't gain anything out of it. You're here to make money. Stick to that concept and don't rack your brains too much on it. For all of you guys that are here, go ahead and hit the poll as well. I want to see at the end of the poll what happens. Do we have more people that are believing that we're going to sustain all-time highs? Are we going to go higher or no? And what is it, right? You see, the volatility index is at 17 now. So the bull market, you know how you get to know of a bull market, right? These are some of the secrets that I have learned, which are not really secrets, but it's tough for people to follow because it's like a rule book, right? It's easy to follow when you're in the military, but it's very tough to follow when you're in capitalism. The reason being that everything is so dynamic that it keeps changing that you're not sure whether it's the right thing to do or not. So every time you see the VIX, which is the volatility index, for from a layman's perspective, it's the amount the index is supposed to move in a given day, right? So if you sustain below 18 on the volatility index, usually have a bull market going on. The fact is, we've been sustaining below 20 for a while now. If you go down to the daily charts and start seeing, we had a rally all the way up towards the 2021s, but we never broke out substantially from there. And that was during the Israel-Iran tensions that were going on, which seemed to have ended in like 5 days or like 7 trading days, right? It was pretty much done and over. Whereas everyone was worried at that time that we're going to be seeing nuclear war, the world's going to come to an end, that there's going to be rockets flying all overhead. To break it news to all of you, it does not have a nuclear weapon, so there is no way we were going to nuclear war. Just signal from noise. Just think logically about it. Anyways, all the way from May, 23rd May, or somewhere around, you're looking at actually the start of May, 9th of May. We have been trading below 20 on the volatility index on the VIX. So you've been below 20 and been trading there. Here's what happened. If you look at it, the markets, right, from 12th of May till today, let's go and look. The volatility index below 20, below my number, which is basically the fact that you're below that mean long-term average, which is basically a bull market, right? If you just had that math to do, you're looking at 9th May when that number came in. As of 9th May, the market was at 20,000. We're at 22,200. We're currently 11% higher, while the VIX has been lower. Please remember, these are things that you should learn, not things on the newspaper, things on news channels. I am going to start doing something where maybe in a month or so, I am going to start doing the lives from my laptop so that I can actually break down all of these live shows that are going on CNBC. For when you have Powell coming in, when you have any of these other FOMCs, governors coming in and speaking, because it's high time that I sit down and tell you guys that listen, it's high time someone starts calling bullshit to what is not supposed to be taken by people as signal. So stop believing everything you see, please, for the sake of heavens. If you really want to make money, this is the way you need to start thinking. We've been saying since a very long time back, and Wage Freedom right there in his comment also agrees, because we've been telling him as well while we were in the chat. He was part of this conversation as well, at least a month back or a month and a half back. when we had this obliteration day and these tariffs that came out of some godforsaken formula that they came up with, be that as it may, we were sure that those numbers were not going to sustain and we were in it for a bull market. We've been right, we've been proven right, and we will be proven right time and again in the future. We're humble enough to know when we're wrong and we will come and admit it. As of now, we're right, so be that as it may. Okay, let me just go ahead and see a few things so I know what's going on. Like I said, right, one of the IPOs Chime that I'm currently looking at is up about 2.59% in pre-market. It's been having a horrible day. Markets have been going up and Chime has just been falling on a daily basis. I do believe it has potential to reverse and maybe go back to like 40, 44. Let's see what happens. Reddit's been adopting a lot of AI lately. So the stock has moved all the way from 110 up to about 140 as of yesterday, and today it's going to be opening at about 147.34. The high 3 days ago was about 148. So I think if we do take out 148, 150, 160, 170, possibly on the cards, right? You could see that move all the way higher. Okay, let's go over a few more stocks. I want to see anything that's moving like crazy. Yesterday, you did see one of the stocks that I do spend a lot of time talking about is a stock called as the Trade Desk. 4% move from the lows of the day, was trading at about 66, ended up closing at 71.80. Now is it trading at about 72.80, another percent and a half higher. So it's a good stock, good company. Go ahead, study it. If you guys like it, buy it. If you don't buy it. Anyways, AMD's been on a rally like there's no tomorrow. During the April lows, AMD was trading at 76. As of today, it's going to be opening at 140. 40. AMD is flying through the roof, right? You had a 6.5% move, 6.83% move as of yesterday. We were actually looking at it even during the open yesterday, but 6.83% on AMD. So that's that. Nvidia had its highest closing at 147 as well. So I'm going to keep a watch on seeing the semiconductors are taking the Nasdaq up. The semiconductors are the ones that are making markets go higher. So you're seeing AMD, Nvidia, all of these guys picking up and taking the market substantially higher. Let's see what happens about this. It's actually going to be a lot more fun to figure out how does this play out. Let me go ahead. Let me see what else. What are the other stocks going on? AMD's picked up. Nvidia's picked up. Netflix is again making a new all-time high. 128.0 on Netflix. I mean, it's just flying. 128, 1.23. Netflix and Spotify have just been crazy. Let me see. What about the others? Tesla's up about a percent. So nothing too fancy on Tesla. It was the only one I think that was down about 2.35% yesterday, while Uber was up 7%. So let me give it up to Uber because a lot of people were not sure about how the Tesla Robotaxi day went, but considering the fact that a lot of people, I mean, see, at the end of the day, a few people that got the invites for the Tesla Robotaxi event and the pickup and drop service were all time bulls, were supporters of Elon. So you are only going to hear good shit coming out of it. Even though I did see a video where the Tesla Robotaxi ended up going into the wrong lane. So I don't know. Let's see whether that thing works out. So Tesla was down 2.3, and because of that, Uber was up about 7. Uber could very well be on its way to making, I think, an all-time high pretty soon, and could be on its way to 100, 110. I was not sure whether this would happen. I was still circumspect because if the robotaxi launch does, and remember one thing, right? Even though the robotaxi launch didn't seem to go that well, you're fighting against a beast like Elon. The guy can always come back, and he will hit you so hard that it's going to get tougher, especially when his back is against the wall. You don't get better CEOs at that point of time or visionaries at that point of time than Elon to come in and fight to get things right. Now, it's not like he's not seen this concept where his car was going in the wrong direction or in a wrong lane. They're going to go in and fix this. They know that they have a trillion and a half dollar opportunity in the robotaxi event, and they're going to fix it so that they're able to come back stronger. If there was anyone that I would want to bet against, I would never bet against Elon. Right? I might never go long on his stocks, but I might not bet against him for sure. That's just the way it is, right? You don't want to bet against the smartest guys in the room. It's just plain and simple. Let's go see what else is going on. SoFi is up another 1.14%, so that's hit $6. It was trading at about again 8, up about 100% in 2 months. So sorry to break it to you guys, but a lot of other people, especially in the media, that this is the bull market. Yeah, things in the economy do look like they're weakening, but this is still a bull market, and these are how bull markets do work. So you can admit it, you don't want to admit it. We most likely will open into all-time high territory, and we will head higher from there. So whether you like it or you don't like it, it's going to happen. Let's go ahead. Let me see some of these stocks on the S&P 500. Apple is still down about 30% from its all-time high, right? At some stage, it'll be a value play. Are they able to take around these AI plays, and are they able to take around a lot of these issues that they have with artificial intelligence? I don't know. But I'm pretty sure at least for the next 5 years to come, I am going to still buy an iPhone and use an iPhone. It's going to be a while before I shift out of it, but it's not today. Let me go ahead. Let me see if there's anything else crazy. AMD up about another percent. What do we have? Broadcom is up about 1.83% again. Broadcom's making an all-time high again, blowing up like crazy. The low was 138 in the April sell-off. Of 138 in the April sell-off has now flipped all the way to 265. So that's that, guys. Let's go ahead. Let's see some of these other stocks. Anything playing around in the pre-market. Let me also go and see what's happening with hims and hers. Right, that was a stock that was down about 30-35%. Was it 34.63% on the other day? Okay, news that's coming out. NATO allies agree on a new defense spending target at 5% of GDP. Looks like Trump won this one as well. He's been saying that I want that 5% spending, and NATO agreed. Could possibly be the start of a Eurozone and an America deal that takes place as well. So, could purely happen, right? So, let's see how that works out. Let's go in and see if there's anything more that's currently going on. Do we have anything else? Yeah, Pfizer's been on a rally. So they have started their own stable coin, and it's called FIUSD. So it's currently been something that's making this thing go crazy. Stock moved all the way from 156 all the way up to 175. All said and done, that's been working out pretty well as well. Let me go ahead. Let me see. Who do we have here? That's Sprung Garnold saying nerd. Oh yeah, that I am, bro. That I am. I'm one with the money though, but fair enough. Thanks for tuning in though. Nice to see you as in chat. But I am, right? I live and breathe this thing. So if that makes me a nerd, I'm surely a nerd. Nice to see you in though. How's it going on your side? Let's see. Let's see what else is going on. What stocks picking up? I want to see Intel, right? I'm in Bali right now, buddy. That's why it's a bit darker at this moment. It's about 8:26 p.m. So yes, let me get back to this. What else is going on? Oh, how's it going in Bangladesh then? What's happening there? What time is it there though? What is it like? 6 p.m., 5:30 p.m. Should be somewhere around there itself. Yeah, so Nvidia is up another percent. Is it going to be hitting a new high though? A new high is at 153, so that's 3.5% higher. It's going to open at 149.30. That most likely is going to be making it go towards 153. And if it breaks 153, most likely the Nasdaq should continue higher as well. All right. Let's see. What else? What else? Any other stocks? Anything crazy? SMCI is up about 1.6%. Waste of our time. Let's see what's up with Robinhood. Yeah, what time is it in Bangladesh, bro? 2.5 hours, 3 hours back? I'm still waiting for your answer about that. Okay. Robinhood's gone all the way to about 85 now. Yesterday was up about 7.4, up about 3.52% today. 82, 84. Remember, this stock was at like $5, $6 in 2022 in the bear market. Yeah, in November 2023, that's December 2023, it was at about $8. Now it's at 85. Jesus. So that's about a 12 bagger in like a year and a half, 2 years. But that's if you catch bottom to top tick, right? Obviously, it did also at one point of time rally all the way till 85. So that's the all time high. See? Should take it out again today. Very close to making a new all time high. What else do we have? Let me see. Yeah, we are close, man. We are close. Sean's in the house as well. He says more gains. Yeah, more gains. At least gains for today. Maybe I would be circumspect about the fact as to could the market at some stage have some form of a pullback intraday? It could, quite likely. It's not rocket science that it couldn't. I would expect it to at some stage. But at the moment, it doesn't look like it. At the moment, it looks like we're heading higher. So there you go. Good to go. We still got about 80% of our viewers taking into the fact that sky's the limit, right? Most people are saying that we are going to see all time highs today. It looks that way. When 3 is where we're going to be opening 91 points higher on the NASDAQ. That is going to make us go about 0.4%. And today it is that we make a new all time highs. More gains, yes, at the moment for sure. I do get wary as soon as we get into all time highs for intraday movements. These are not for long term holdings. Long term holdings are absolutely okay. They're just going to start doing better and better. Okay, here's some fun facts for you guys. New York City's economy is the largest in the nation with $2 trillion in gross metropolitan product for the area. It represents about 9% of the total US economy. So, just to tell you how strong New York City is. Okay, let's see. Allies agreed to their higher 5% of GDP defense spending target, up from their previous 2%. That is good. Let's see. Besant's supposed to be meeting lawmakers at 11 a.m. They have this stuff going on with the salt cap, which is their state and local taxes, the $50,000 number that they're expecting, a $40,000 number they're expecting. Hopefully, they work that out and then this bill can get cleared. It just makes things more simpler. Anyways, we got some news. Sam Altman confirmed he spoke with Microsoft CEO this week about the future of their partnership. While acknowledging tension, Altman said the relationship has been really wonderfully good. Talks come as Microsoft weighs changes to its stake in OpenAI. So let's see how that works out. Eventually, OpenAI is going to do at least the unit that they spin off, which is the for-profit unit, that is going to come in and do an IPO. It's just going to happen. There's nothing you can do about it. It is going to happen for sure. That could also necessarily mark the AI bubble top. Are we in an AI bubble? Yes. How long does it last? Way longer than a lot of us believe. So could go on for a year, could go on for 2 years. Who knows? It all depends on the productivity increase that we all get from AI that eventually leads to dollar values. The only way that this becomes a bigger bubble is the fact that there is no dollar increments and there is in terms of revenue, and there is only dollar increments in terms of capital expenditure. That is an issue. Keep that in mind whenever you think of an AI bubble, right? I mean, we're not close to 1999 levels. That would be about 26 times price to earnings ratio. 26 times price to earnings would pretty much put us at about 7,800 on the S&P 500. So that's a while away. We're not even close to that at the moment. So let's see a few more things. What else is going on in the market? Okay, let's see. Anything interesting? What stocks are you guys owning that is up substantially in your portfolio and you're scared of selling it just because it keeps going higher every day? I have a few. I'm also looking at I'm actually trying to see whether I can find stocks at this moment that are not egregiously valued and have not run up extensively, but are on their next leg to move higher, at least what I believe. I'm not sure if I can find that, but let's see. Okay, we got that. That's done. Yeah, at the moment, the S&P 500, Nasdaq 100 index futures extend gains to session highs. The Nasdaq 100, which is the triple Q, is currently on pace to starting the trading day at new all-time highs. That is worth a comment in our channel. So there you go. You guys should see it right there. Okay. For everyone that's coming in for the first time, this is the live that we do before the market opens. So go ahead, subscribe, get a notification every time I go live, and then you can join in. To me, pre-market doesn't count. I need the market open, and new all-time highs for me is when the market opens. And if we are at an all-time high, then until then, you can have any tweet and Truth Social post and anything under the sun that can make this market go lower. So it doesn't count. Okay, let's see. Okay, for the first time, Iran's foreign ministry did came out and say that their nuclear installations are badly damaged by American strikes. So that's going to happen. I don't know why Morgan Stanley believes that they expect Jerome Powell and the Fed to deliver 7 rate cuts in 2026. I don't know where they got the 7 rate cuts number from. I'm pretty sure they're doing about 2 to 3 this year. So 7 next year is about 1.75%. So 2% lower by next year this time. I don't think so. I'm not of the opinion that you're going to see 7 cuts in 2026. 7 cuts in 2026 means something's going to be breaking somewhere, something's going to be happening. It would be very fascinating for me to actually believe that we are going 25 basis points lower for 7 consecutive. Let me actually check this. How many FOMC meetings? I think we have 11 or 12, 8 times a year. So, and then Jackson Hole. So, about 8 times a year. If you're going to be expecting 7 of those to be cuts, I mean, yeah, I mean, these are the same guys, remember, that came and told you, right? That to a large extent, Morgan Stanley, Goldman, all of these guys were telling you that oil is going to go to 90 and 100, 110, 120. It didn't happen. Oil had its worst day. Drew Tate, for that matter of fact, came out and said that oil is going to be exploding. It was the biggest drop on oil that's happened, right? That's pretty much not going to be happening. Let me see what is my job? Ain't enough to earn from the stream. Oh, I don't earn from streams, bro. This is free. I make enough through investments. This is fun for me. I'm glad that you're staying along, so you can enjoy it too. Let's go ahead. Let's see more stuff that's going on. So Loop Capital came in and reiterated buy on Nvidia and raised their price target to $250 from 175. That's a lot. I wouldn't have expected that. Like all the way from 175 to 275. That's a lot. 250 now. Anyways, Cantor Fitzgerald also overweight on over, so that's picking up as well. Wage Freedom says lol fated. Yeah, exactly. I mean, I don't know. He was smoking a cigar, shirtless, talking about how oil is going to be exploding. This is one of the reasons why we stick to finance, because we know what we're talking about. We don't go into other people's territories and talk about their what is it that Trump should be doing and what is it that Iran should be doing. We don't really know. We don't know about it. So I don't know why he had to put up this thing saying oil is going to explode and all of this, but yeah, fair enough. Oil had its biggest red candle that I have seen in a while, maybe post 2020. Now that I say that, let me actually go and check. Let's actually check what happened to Brent. I actually look at WTI, but no harm in looking at Brent. Let's see. Okay, let's just see US oil, whatever. US oil was down the other day 9.11%. Let me actually go and see if I've ever seen a 9.11% in a while. All the way back to 2020. Let's see, that would actually be the effect of Andrew Tate going all the way back down. Seven. No, not in 2023, neither there. I don't really see it falling all the way to 2020. So, yeah, that's that. So, usually when most people don't expect shit to happen is when it happens. This was one of the worst days for oil I've seen in I don't know how long. Yeah, the maybe the only one was 13th March 2023 when oil dropped 13.55%. So I think Tate got it right when it came to catching the top, but he just caught it in an inverted way. He said it was the bottom, but yeah, fair enough. Anyways, so Morgan Stanley, Goldman, all of these guys, they keep thinking that they're gonna get it right. They always have it inverted. So you rather just fade them and just carry on with life and don't pay too much attention. Okay, let's see. This is fascinating, right? The Korean stock market index, the Kospi 200, has ended up hitting a new multi-year high. So it's not just America that's hitting. A lot of these guys have been coming out, and it's been seen on charts where a lot of the non-US indexes have been hitting new highs. Right? They've been doing really, really well. Germany and South Korea, for that matter of fact. Okay, we got Trump saying a few things, so we're going to go over this for another 15 minutes, 10 minutes, and then we'll go into what I wanted to talk about the markets and everything else. So stay tuned for that. But Trump says that Steve Witkoff has told him that the Gaza deal is very close. Now, how close is very close, no one knows, but close is close. So fair enough. What else? What else do we have for today? Spain probes Novo Nordisk. Novo Nordisk had some shit going on with all of that news that was coming in with HIMS, which caused HIMS to go down 35%. Novo Nordisk, yeah, $70. It's down about 2% as of today. But that's because of the Spanish probe that's coming. It was looking like it was going to break out eventually. They're trying to look for a new CEO. They got too many issues going on at this moment. So I rather stay away from the stock rather than entering. They had an issue the other week as well when they pulled out of the HIMS thing, and that was a partnership they had a month ago. They just signed a partnership contract with HIMS a month back, and then they just had to go back and say, okay, no, we're not doing it because these guys have been having some shady practices or some of the other issues that they came up with. 4% up on Robinhood, 4.36% up on Coinbase as well. Coinbase has been going crazy with the Circle IPO that took place, right? EC is their currency that's pretty much under them. So I'm pretty sure they're going to be hitting an all-time high pretty soon. How far are they? 420 was their high, so 24%, and you're up 4% today. So maybe about 18 to 19% for Coinbase to go in and hit a new high. So that's good. That is something that we're going to see. Let's go ahead. Let's see some of the other stuff, if anything really happened. It's a steady Fed president says, in my view, we are currently very near to both sides of our mandate. However, monetary policy works with a considerable lag. Policy must be set not in relation to where the economy is as much as where the economy is going. This is never easy, and it is not easy now. We are seeing a lot more Fed governors turn bullish, right? So that is something that I have seen. It is beginning to happen. A lot more of the Fed governors are coming in and saying it's time to start being dovish and cutting rates. Two of them came out, Christopher Waller and Michelle Bowman. So two of them came out. Yesterday, we had the New York Fed president come out and say that no, we need to wait for some amount of data. We also had Powell's testimony, which came out and said that, yeah, we need to wait for more data. So maybe you're going to be getting a lot of people that basically go against Powell's decision. So how is he going to be getting everybody together and then deciding? Let's see. So the trade desk, we got some news 3 hours back. Edgewater comments says companies more active in agency outreach with some recent flexibility on platform fee. Second quarter macro better than feared, though competitive risk remains. Okay, great. Trump says there's a lot of progress on Gaza. Vietnam expects good results in US stocks sooner than 2 weeks. So two of the biggest companies that would be sending their stuff from Vietnam would be Apple and Nike. So I think Nike reports earnings today after close. But I think if there is going to be a Vietnam US trade deal that does happen, there will be a bullish move on Nike as well as on Apple, right? Apple's been moving a lot of its production out of China into Vietnam and India. Nike and Lululemon have a large amount of products based in Vietnam. That being said, let's look at Lululemon. It didn't have a green day yesterday, finally, 3.27% up. For the sake of the Lord, it was up. It has just fallen like no tomorrow since the day it gave out its results. It's been falling 2%, 2%, 2%. God alone knows that never stopped. It just kept going lower. Anyways, yesterday we had a 3.27% move higher, so that's good. Let me go ahead. Let me see another few things. Trump says the Iranian nuclear program has put back decades. The US hit on Iran, ended the war. Trump also asked if the US would strike again if Iran rebuilds. Trump says, sure. So cool, right? US ESPN makes a small equity investment in Premier Lacrosse. Yeah, taken a minority ownership stake in the Premier League and has renewed media rights for the league's games for 5 years. So yeah, that's a way for them to be getting. They did that with Epic Games. Remember, a part of Fortnite that everybody plays, a part of Epic Games is owned by Disney. How much of it? I think about 9%. How much of Epic Games is Disney on? About 9% or 10%? 10%, right? They got a pretty good deal, man. Look at it, 10% for a billion and a half. You get how many games, how many players on that? 10% for 1.5 billion is a good deal, man. I would say it's a pretty good deal. 9%. Yeah, I was right. About 9% is what they got for a $1.5 billion investment. That's a lot of money. Yes. But I mean, it's a good way of even making investments. That way you can have them Fortnite playing around in the Disney thing and players playing around with Disney. So fair enough. Trump says the US hit on Iran ended the war. It's put back decades. Ceasefire between Iran and Israel is going well. Oh, this is fun. US Secretary of State Rubio comes out and says that the Iranian conversion facility can't even be found on the map. It's wiped out. Trump also says that I think we'll have somewhat of a relationship. Anyways, Zelensky is supposed to be meeting Trump today, so maybe shit works out. All right. Yeah, let's see what else. What the hell is this? France's world line tanked over 23% after reports surfaced it covered up fraud tied to high risk clients. So yeah, that fell about 23%. Cool. I don't know what this Morgan Stanley report is about US Fed to deliver 7 rate cuts in 2026, starting in March, taking terminal rate to 2.5% to 2.75. So I don't know if that's going to even stick. But yeah, okay. Yeah, I'm done with this concept of every time everybody just comes out and says that the Iranian program is now behind by decades, decades, decades. We get it now. Everybody gets it. The Iranians get it. The Israelis get it. Everybody gets it. We can all just calm down. Trump says he stands with Article 5, reiterates complete total destruction, praises statements from Israel and Iran. Cool. Okay, let's do one thing. Okay, this is one thing that I had to do before I go back and start talking to you guys about the market is what is happening with Berkshire, right? The stock is down from its all-time high. Stock was up about a percent yesterday. Used to trade at 542. It's trading at about 493. So you're seeing it down about 9 to 10%. This is the Buffett premium that they're losing. Sorry, Buffett did come out and say that he's no more going to be part of the meetings. He's going to give up the CEO role to Greg Abel. That's eventually going to lead to some Buffett premium coming out, and that's what we're seeing. Stock's almost 10% away from its all-time high. In a market that's hitting all-time high, you would expect Berkshire to be at all-time highs. Sorry. Yeah, but it is that case currently because you don't have the best manager in the world running your business. There is no premium that you're going to attach to it. Okay. So before I jump into this thing where I'm going to be talking about exactly how do we act when we get towards all-time highs, for all of you that are suddenly new here, go ahead, subscribe. I do this about an hour and a half before the market opens and about half an hour post the market opens. Sometimes when it's a fun day, I go in and put in a post market as well. That's at about 7:38. So you guys will get a notification about 30 minutes before I go in for a live. Okay. So in more important news, people have been saying this that how is it that an all-time high is not a sell signal and why they should, right? It's remember something, right? Markets being at all-time highs, it's never your cue to run away. It never usually is a reason for you to just get away from everything and go ahead and just look for, better investment somewhere else, or go ahead and look for, let's say, some other place where it's not run up that much. Keep in mind, it's not really that much of an issue. It's usually your wake up call to start paying attention. It's usually the time when you must start looking into the fact as to why is the market at all time highs? Can it sustain at these levels and can it keep going high? Right. So remember, all time highs reflect strength. So they're not something which people are saying that, okay, you know what, sometimes when you get to all time highs, it could be weakness or it's not a form of strength. It is strength. It is pure strength because when you break out of a previous high and you go higher, you don't stop there. You keep breaking out and going way higher from there. So that is something that you must remember. Remember always, weak markets do not make new highs, only strong markets do. what we have today is a strong market. That's the reason I'm having this live longer than usual, because I need to talk to you guys, make you guys understand the stuff that, guys, there's a lot that is required in order to not sell in a bull market, right? A lot of people find it easy to sell in markets that are crashing because they just sell it and try saving all the money that they can. Not selling in a bull market requires you to have immense courage and patience, right? You need something called as intestinal fortitude. For all of you that know what that means, then great. But for you that don't, just go ahead and Google that, or chat GPT that these days. I don't know, whatever you guys do, right? Something to think about. You know, the major market correction that we had before 2022 was the COVID crash. So the markets came lower. We saw the entire crash happen in a month. And right when the lockdowns came in, you had pretty much a bottom in the market that came in as well. Now everyone can say, okay, yes, fair enough. Everybody went back home and started trading and all of that. But I mean, let's be honest, right? At the end of all of it, you did get markets going higher, even though the number of deaths were increasing. Now, why was that happening? Is because the markets realized that, hey, people are dying, but everybody is not going to die. The reason the market collapsed completely was because it looked like everybody's going to be wiped out. So if everyone's going to be wiped out, who's going to remain to trade, right? Eventually, we started realizing that, okay, there might not be a vaccine, but at some stage, there will be something that will protect most of us, and most of us would live, and very few of us would die. So that happened. The market rallied even during the largest deaths that we were seeing, right? Bodies were stacking up, but the markets rallied. Look at it this way. Same thing happened during tariffs. The markets collapsed completely because it started expecting the fact that those rates would cause capitalism to come to an end. When they started realizing that, okay, maybe Trump believes that these rates cannot sustain and he would pull back, the market started rallying from there. So you started having the lows being coming through in the market at the worst possible times. And then you had that one beautiful tweet that came out from Trump saying today is going to be a good day or something like that. And then you had a 9% rally on the index, and then the stocks just went crazily higher, right? That's happened before as well. Remember, the S&P has historically delivered positive 12-month returns 80% of the time after you've got all-time highs. So every time you've seen all-time highs, markets have gone higher, you have seen the S&P 500 come in and make a new high, right? And 80% of the time, you have had positive returns for that year. So if that's going to be happening again this year, which it is, as the way the market looks like when it's going to be opening today, you will more than likely have a bullish year. Quite possible that this is a year which is like a 5% or a 10% up, maybe even more, but I would expect it to be between anywhere from a 2 to 12% higher. All right. That's my base case as to what is possible. Now, in this whole story about trying to look at how all time highs are not a sell signal, another thing to keep in mind is selling too early is your number one mistake. Why is it your number one mistake? Is because selling too early basically means that many investors, right, they basically start selling a rally thinking that it's overextended. They think of it that, okay, a lot has been done in too little of a time, which is what the market is currently believing. That a lot of market participants currently believe we've run up too fast, too much, too soon. Keep in mind that because of that, if you're selling based on the fact that your horse has ran too fast, too soon, you are going to miss the next leg up. And the largest money is made in the last leg of a bull market, not in the first leg of a bull market. Keep in mind, the last leg of a bull market, which is, I don't know when it happens, but whenever it does happen, you make the largest amount of money, right? It's not in the start of a bull market that you make your largest money. Remember, selling too early is like a number one mistake. It's what pretty much our god Warren Buffett does come out and say at all points of time, that markets can stay irrational longer than you can stay solvent, right? Or pretty much stay out of them. So they can keep going higher and higher while you expect rationality to prevail, and it might not happen, right? And maybe you then go in and buy at a price which is way too high, and then you're caught thinking that the markets could have been lower and maybe I should have bought in at some other stage. All of that other nonsense that's there to it, and you screw up all of your compounding because of that. Don't do that mistake. I would suggest at every dip lower, this is what smart investors do. They accumulate, they don't panic. Smart investors accumulate, they never panic, at least they try not to, right? A lot of institutions that are managing money for pension funds, managing money for big clients, for high net worth individuals, for them it's easier to get bulled up and to get bullish on markets once we're already at new highs, because it's an easier sell to their clients saying, hey, listen, this is a bull market, we're at all time highs, why don't you invest? And they make their money through commissions, right? So that's one way of them making more and more money. So they use confirmations like bull markets as signals to add exposure. So that's how institutional investors trade. you should be thinking of the way the institutions trade and front running those trades, making money before that happens, because you're then able to extend your compounding rate of return. Not everybody is out here to make money, right? This channel is not for me to make money. It's for all of you guys to make money. And if I can help you guys do that, nothing like it, right? I mean, in all essence, I don't really necessarily need to be on YouTube and talk about these things, but I said, you know what, let's do it. Let's see what happens about it, right? And I keep doing this like about an hour before the market opens, maybe an hour or two after the market closes. So, anyways, keep in mind, smart investors do not panic; they accumulate. At all points of times, remember that, right? And sometimes you do get scared that maybe I should not be holding on to something, maybe I should be selling something, maybe it's time for me to look at another investment, maybe it's time for me to pull out from the market as well. The reason you do that is because what happens is you start having one of two positions, a few of the positions that are exceedingly risky in your portfolio. So you could have two or three positions that have about a 30% weighting, 40% weighting on your portfolio, which makes you shit bricks when the market pulls back in a bull market. Remember, corrections or pullbacks in a bull market can test you really badly. You're going to keep thinking that, okay, this is the top, and it's never the top. You always have a next leg higher. The thing is, you will be tested and you might not be able to deal with that test because a large part of your portfolio is held in a few stocks. All right. So I would suggest keep diversifying to a certain extent. Maybe 8 to 12 stocks is a good number. Don't go into like three stocks or four stocks and put like 30%, 25% in each. Because if you're not a professional investor, if you are a professional investor, you won't do such kind of things. And if you have not been doing this for multiple decades or at least a decade and a half, please do not try thinking that you're going to be able to deal with drawdowns the way the big guys are able to. You're not going to be able to deal with that because you don't have the experience of doing it. So remember, have diversified portfolios, and you can then over the years, as you learn with drawdowns, as you learn with cycles of markets moving lower and markets moving higher, you can always learn to adapt to lower diversification and higher concentration of stocks. So that is something that you should keep in mind, right? Just because the stock is priced higher doesn't mean that it's got more risk. High price doesn't mean this thing. The current price of a Berkshire Hathaway share is $740,000, three-quarters of a million US dollars. That means it's the most risky share in this on this planet. No, it for sure is the least volatile stock, right? It for sure is the most steady stock that you can find out there, and one of the best compounders that you could have ever found as well, with one of the best managers in the world that you could have again ever found as well, Warren Buffett, right? So risk pretty much comes when valuations are excessive and fundamentals are deteriorating. So if you have a company whose revenue has been falling, losses have been increasing, but the stock price keeps going higher in anticipation that someday it'll change, it's usually not a good scenario. Now, again, buying loss making companies is never not a bad idea. If the losses are reducing, there is obviously some headway, there is some runway to eventual profitability. You can always make a lot of money on that. But if your stock is doubling while your losses are going up 5x, at some stage rationality will come in and these prices will correct and they'll be down about 80 to 90%. Look at the 2021 IPO craze that happened. You saw stocks go up all the way till pretty much from like a 30, 35, $40 stock, go all the way IPO, go all the way to 170, $180, came crashing down to about single digits. The only reason that happened is because losses were increasing and traders were buying the stock. It wasn't investors. So eventually, when traders are the only ones buying a stock, you will see more volatile moves because the job of a trader is to make money off volatility. Remember, its risk pretty much comes when valuations are excessive and fundamentals deteriorate. Not just because, okay, the stock is up a lot, so it's risky, right? Or it's up 2x, it's too much in a year. Sorry, I can't buy in this. Past returns of a stock do not always equate to the fact that it's a risky stock, right? Please don't think of those kind of things that's happening. I have some data here to show you guys. From 1980 to 2022, right? That's a period of 42 years. The average 12-month return after an S&P 500 all-time high was over 10%, nearly matching the long-term average, proving highs are often just the beginning, the end. Remember, the average 12-month return after an S&P 500 hit an all-time high was over 10%. We're currently hitting an all-time high today. We could very well move towards a 10% and higher number, right? A 10% and higher number would be taking us to 24,600 on the S&P, on the Nasdaq, right? possibly a 6600 on the S&P 500. Could pretty much have that kind of a scenario. So never fear highs. Never ever fear the fact, okay, we're in a new bull market, we're at new highs. Make sure to study them. Spend time understanding how highs work, how bull markets work. History favors those who ride the wave, not those who just basically jump off the boat saying, okay, it's up a lot, I cannot be buying. It's always going to be the guys that know what has happened in the past, go back in time, look, study, understand, and are able to ride the next bull market. That's why you make money. Bull markets is where you make money, man. Then you have to play this game for a longer period of time. Stop playing this. Can I buy it and sell it within a week or 2 days or 5 days or 2 months? Play it for longer. You really want to do that? Either go to the casino, you'll get drinks free. At least you'll get drinks free. And second, if you really want to do it with maybe 1 or 2% of your portfolio on the side. You don't necessarily need to do it with 10% of your portfolio. You don't you don't gain anything out of it. Right. I'm going to get back to teaching you some stuff here and there. Let me just see if there's anything else that's happening. Zelensky Trump meet on the sidelines of the NATO summit. Let's see, all 32 members have approved a 5 point declaration presented during today's summit, investing 5% of their GDP towards defense and security related spending by 2035. Okay, let's see. Israeli media says Air Force is working to intercept a drone launched from Yemen. That's okay. Kevin Hassett comes out and says that trade deals will come sooner rather than later. There'll be a lot of trade deals after the tax bill passes. Hopefully, the tax bill should pass. I think it's being put in the Senate on Friday. So before the 4th of July, I'm guessing it should go through. So, anyways, do we have anything else that's going on? It's actually a pretty cool picture about the all the 32 members of the NATO coming together and having a picture and deciding to deal with it. Hopefully, they can form some form of a trade deal and get away with this tariff nonsense that's been going on as well. Okay, Reddit's up about 5.26%. I'm guessing it should be opening closer to 147, 148, 148.20. Would that be breaking its previous high that it made on 20th June, exactly 5 days back? Yeah. So 5 days back, Reddit's high was about 148. As of now, we're going to be opening at 148.20. So still time though. We got about 25 minutes more before the market opens. So let's see what happens there. All right. Okay. Another thing that I did write down that I wanted to explain to you guys was what is it that typically happens after markets hit all-time highs? Right. Now that we're already here, now that we have reached an all-time high, how in the world do we deal with it? How in the world do we go ahead and what do we do? Right? Fair enough. Let's say some of us have invested, some of us haven't invested. For those that have invested, they're going to be enjoying the gains. For many people at this moment have been sitting on cash. A lot of people have a certain percentage of their portfolio in cash. What do you do? Right? So, plain and simple, what I've been saying even in the past 20 minutes is that all time highs are often the beginning of bull markets. They are not the end of a bull market. They are usually the beginning of a bull market and they tend to go up higher and higher over time. It is something that I've been saying since the past 2 months that I was expecting us to get into new highs. Maybe by the end of August, September, we have gotten it pretty much as of 25th June 2025, right? If this is anecdotal data, right? Usually when we're about a month, in a month after the all-time high, this average return that a stock has, the market has, is about 1.5%. It's about 74% of the time positive. 3 months after making an all-time high, the average return is about 3.7%. 79% of the time you're positive. 12 months after making a new high, we're up about 10.4%. Like I said before, right? On an average, when you make a new all time high, 80% of the time, which is 81% of the time, you're positive and you make a 10% return after breaking the all time high, which would take us to about 6,600 of the S&P 500. This is not me saying it. This is JP Morgan and market back testing all the way from 1980 to 2022, 42 years of data. What's the interpretation of this data? What it means is that when I make a new high, it is not equal to the word. What it is equal to is continued strength. What I'm seeing is that when I make a new high, there's going to be continued strength and the bull market continues or begins from there and could be seeing a 10% rally. Now, do you know we have about 6 months left in the markets, right? July, August, September, October, November, December, right? 6 months left for trading to close down the year. We could very well go up 10% in 6 months. It's pretty much 1.5, 1.6% per month in order to get there. It is not rocket science. You could have a month you could be down 3 and another month you could be up 6. And that could solve this whole thing and put it back us towards there. So you have seen this. Markets have done this time and again. Please avoid this mistake of selling just because it's a new high. Watch for strength confirmation. Watch for this breakout to happen. Watch for a retest. Then go in and buy stocks. Go out and buy companies that are coming up with better earnings than you expected, better earnings than the market expected. Buy the best stocks in the market. Buy the stocks that are heading higher because they're making more money. Don't buy the ones that have not yet caught up on the rally. That is never a good way of trying to make money. Don't try catching a falling knife. Usually your hand will get cut. It doesn't make sense, right? So it's let me go back and give you three examples just in the past 10 years, right? In 17, the Trump tax reform optimism came through. You had the S&P 500 that made a new high, and it ended up making 60 plus new highs that year. 60, 60. In the late 2020, post COVID, vaccine rally and you had a tech boom that went stocks went crazily higher. All-time highs did not slow the market. They fueled through institutional flows because a lot of money started coming back in. We have $7 trillion worth of cash sitting on the sidelines to enter the equity markets. You think they're going to enter 20% lower? No. Why? Because we're not going 20% lower. When are they going to enter? Today, weeks from now, months from now, and they're going to fuel this bullish market strength. Very likely we could be at 6,500 by year end, 6,600 by year end, and that is something that you should keep in mind because it's quite possible that we're able to head there, right? That is something, again, please keep in mind, all time highs, they are not ceilings. They're just markers on the highway so that you can end up making wealth eventually, right? They're never a ceiling. They're usually cases where the ceiling, even if you do believe it's a ceiling, you're going to break into that and go to the floor above. Bull markets are born out of strength, right? There's optimism around it. It creates euphoria at the end of it, which is the wall of worry from where we all follow. And that's the end of the bull market. But we don't have to worry about that today. Today is the beginning of a bull market post all-time highs. Actually, the bull market began at the 20% lower, but as of now, let's go with what we have. Over the last 20 days, I've generally seen the S&P index outperform the signals from global assets correlated to risk. The S&P has outperformed most markets as of now. Okay, so we got three things today. S&P 500 is going to be trading within points of a record high. You're going to be seeing the Fed chair Jerome Powell. He's going to return to Capitol Hill for his second day of testimony. Most likely, nothing's going to happen about it, but let's see what happens. Nvidia shareholder meeting also kicks off today. So let's see if Jensen has something to say about it. The White House has just published a not previously seen statement from the Israel Atomic Energy Commission stating that they assess this past weekend's strike on the Fordo nuclear facility in central Iran by the US destroyed the site's critical infrastructure. Okay, cool. Anyways, be that as it may. Okay. So as of now, Robinhood is currently on its pace to open the day at a new all-time high for the first time since 2021. These are what bull markets are. You break into all-time highs on stocks and you continue going higher, not lower, continue higher. We got a question from Sean, which stock might be the winner of 2025? I don't know which stock might be the winner. I think semiconductors would still be, I think technology as a sector would still be largely the winner because of the AI capex that's happening, the AI boom that's going on in this world. As a few stocks, possibly Nvidia, AMD, all of these guys, I'm not saying they're going to be the largest winners in terms of percentage. Largest winners in terms of market cap, I believe, would be still Nvidia, AMD, the semi Broadcom, all of these guys, the semiconductor guys. Just purely because of all of this AI capex that's happening, you eventually need these guys to give their chips to build anything substantial. So if you want something like this to happen, if you are looking for a particular stock, I would say played through a semiconductor or an AI play, those guys are still top of the town. They're still going to be there longer than most people can be solvent. So I would believe still quite likely that you will see semiconductors or one technology company doing by far the best in the market. Then again, you could also see companies which are into digital advertising, right? That's a sector that I've been looking at. Digital advertising with the tailwinds that people have about a lot of the people shifting from broadband into the Netflix, Disney's, Hulu's, Primes of the world. You are seeing a lot more money being spent through advertisements on streaming channels. Now, how is that beneficial? It is beneficial for a company like Trade Desk. It is beneficial for a company like Magnite. It is beneficial for companies like Google's or Amazon's ad division that basically sell out these ads within the few seconds that you see an ad while you're watching a show or a movie. And Netflix, Disney, all of these guys make more money when you are an ad subscriber than when you are a paid subscriber. Just something to keep in mind. It could be a very interesting industry because it's got tailwinds. It's got a very large total addressable market. Some of the stocks like Trade Desk is down about 50, 60%. I think what is it? It's about 100% away from its all-time high. It used to trade at 141. It's trading at 72. So give and take, it's about halved in value. So you could see it go up or double maybe this year or next year. I don't know. I'm okay if it takes time. It doesn't matter to me. I'm personally invested, so it's biased, whatever I'm going to be saying. So do your own research and then buy whatever you want to. But my bets are still on the fact that digital advertising and semiconductors or AI companies would be doing well. Another company that I am looking at is a company called Box. They are part of the agentic AI revolution. I do believe that a lot of unstructured data, which is all of your PDFs and everything, imagine the amount of PDFs that an individual like us has. Now multiply that by 1,000 times. That's what a particular company might have just lying around in data, unstructured data. When a lot of that unstructured data is taken by a company like Box and structured through the help of AI and through the help of their agentic AI platforms, Box could very well be a very large beneficiary of this. Remember, OpenAI, NVIDIA, all of them have partnered with Box as well. So maybe you could have necessarily not just the AI hardware manufacturing companies do well. This time could also be a lot of software AI companies doing pretty well, right? So Box is a pretty good company to look at. There's another energy drink maker called as Celsius, right? Let me just go in and put these few things into the chat. So for anyone that's trying to figure out what's going on, uh, right? So these are all the tickers that I look at. Celsius being the second one that you're seeing there. It's basically making an energy drink. It bought out a company called Alani Nu for about a billion and a half, or something like that. They now have combined about a 15% market share, hitting almost 20%, including the other company. They're slowly biting into Monster and Red Bull's business model. They have a tie up with Pepsi. They had some inventory issues with Pepsi, because of which the stock came collapsing down from $100 to about 25, 28. Now it trades at about 45 and should be opening at about 46 as of today. That being said, the company's run pretty well. They have been able, it's a turnaround company. They've been able to turn it around. I have had the drinks. The drinks are fabulous. They're addictive because of their caffeine content. They allow you to lose weight. These days, considering all the wellness stuff that's going on, a lot of these things do sell out. They do make sense. So invest in what makes sense, what you've tried, tested. You'll be able to hold on to those kind of stocks for a lot longer. Those kind of things is pretty good, right? So one of the news that I am getting is SoFi is rolling out a new crypto enabled feature later this year. So it looks like SoFi should be up today. I'm pretty sure it should be up pretty big because it's got the crypto thing going for it. I used to own it, I don't anymore, but I'm glad whoever does, if they're making money on this. But that is good to know that there has been, yeah, about a percent and a half higher, so $16 on SoFi. We were looking at that as a move itself. That is currently going on. Anyways, we were at this concept saying all-time highs are not ceilings, right? So that is something that I am actually trying to explain to everybody out there, that don't look at it as the end and be all. Start investing. If you have cash on the side, just because we're into new highs doesn't mean you don't invest. You could very well move about 10% higher from here in the next 3 to 4 months and never see a 3% drawdown. So you would never be able to go in and buy, right? And remember, we're entering something called as the earnings season. Q2 earnings season, markets are not expecting it to be that bad, but still worse than previously, because there will be some amount of tariff impacts that would be coming in, right? Always remember, when markets are near all time highs, valuations are always under scrutiny. You'll always see a lot more people coming in talking about, oh, the valuations are higher, prices are higher, stocks look too expensive. And to justify these prices, you are always going to need companies to come out and deliver very strong returns. What by returns, I don't mean stock price returns, I mean earning returns. I mean net income returns, revenue returns. What I mean to say is that you will need to see these things play out a lot more, right? So remember, price follows earnings. Without profit growth, all time highs will always be just hype, right? Eventually, the stock price will follow the earnings of that company. For a period of time, it might not, but at some stage it will. For the period that it does not is your moment to enter. Always remember that, right? That's just an easy way to figure things out, that price follows earnings. And without profit growth, all time highs are just going to be a hype cycle that's going to eventually fade away, and you're going to see a larger bear market that comes out of a bubble, right? Because that's the concept of a bubble, that you don't have earnings growth, but you have all time highs already in place. Just few things to keep in watch, right? I mean, you get strong earnings growth, you get a good EPS growth, you get a good revenue growth. It's more fuel for the rally, because now you can have The market's trading at a better price to earnings ratio. The market's trading for scenarios where even in earnings growth above 8 to 10%, it correlates to continued equity gains. Especially in large caps, if it does happen, it'll eventually trickle down into the smaller caps as well. In today's day and age, financials and tech are the two sectors where you see the most amount of participation when it comes to earnings, right? So these are some things that are important for you to keep a watch at all points of time is looking at how Q2 earnings turns out. Better Q2 earnings means stocks head higher. We are going to be going live for most of the earnings that we follow and for the big ones. So make sure you tune in, subscribe, and join in for all the live sessions that we do. You'll get a notification. We're going to follow Nvidia live, Apple live, Amazon live, all of these guys live. So we're going to break it down as well. And I'm going to break it down on the laptop with you guys so you guys can see my screen at that time as well. So make sure you subscribe and you'll then be able to get all the information that's trickling in. Okay, so we got some news on Reddit, right? Which means a fresh buy rating from Cleveland Research. Ross, whoever, sets a $166 price target. He's bullish on new product traction, sees no major ad impact from Google AI overviews, and expects strong ROI tailwinds from the new ad formats. Yeah. So I think FedEx heard, JP Morgan heard our YouTube live today. The current tweet that they came out with is that elevated valuation could limit market upside, but it's rarely a sell catalyst on its own. That's what I've been saying. It's never a ceiling. All-time highs are never a ceiling. JP Morgan agrees with us. It is usually the start of a bull market, and 80% of the time you will see a 10% and higher move, right? Great. So let's go over a few more things is there. We got about 10 minutes more for the market to open. So I don't want to be spending too much time on this concept of trying to tell you guys why all-time highs are great, but I have a few things to let you guys know about. So think of it this way, right? Earnings are the oxygen that the bull market needs in order to keep breathing. So if the bull market needs to breathe more, breathe longer, last longer, keep going higher, earnings is the oxygen that it needs. Without earnings growth, you form a bubble. With earnings growth, you don't form a bubble, valuations improve, price to earnings improves, and new highs continue. Earnings reaction, new highs will collapse pretty much under their own weight, right? Think about it. There's only that far that your car can go on reserve fuel. That is what happens when you don't get earnings positivity coming in because you will not find that petrol pump. So earnings positivity is like that gas pump that you're able to go in and fill your petrol in and make your car go back another 400 kilometers, 300 kilometers, 500 miles, whatever, right? So if we do see Q2 earnings to be great, you do see a summer breakout. Expectations are moderately high, not necessarily incredibly high. Surprises will be needed. I'm pretty sure we had that during Q1 as well. So Q1 was supposedly a market that was expected to be bad, but it was nowhere even close to how bad it was. And the markets did actually way better because the earnings were phenomenal. Because the earnings were phenomenal, markets went up, made new highs, markets recovered, things acted as jet fuel, markets flew. So, oh wow, we got rains here. Anyways, so that is something that I'm saying, right? Always look at this concept. Earnings will be jet fuel to keep the bull market going longer. And look at mega cap tech, Apple, Microsoft, Nvidia. If they keep beating estimates, keep going higher, S&P and Nasdaq will hold and extend higher. It's the game of the town. This is how it happens. Understand the market and understand the way things work. You can profit from it. Remember that. You don't need to find a new way to make money. Find the way that people have been making money, and you can continue making money that way. You don't need to create this new age concept of how do I create the new atoms in this world. You don't need all of that. What you need is to figure out what is the way out here. So keep that, keep that at all points of time. Go back in history, study how things have worked. You don't even need to do that. Maybe just stick into the lives and I'll keep talking in order to explain to you guys that this has happened in the past. This is how people make money. This is how you should make money. It's not about copying them. It's about knowing that there is a time tested way of making money. So stick to it. Why unnecessarily fiddle around, right? Just not needed. So remember, earnings do matter for the all time high to break out, prices to go up higher, things to steadily move even more higher, and you eventually do see a lot more bearish investors turning bullish. And that is usually the signs of a sustained bull market. So look out for that. Short while ago, the Israeli Air Force downed a drone believed to have been launched by the Iranian-backed Houthis in Yemen. So let's see how that plays out. A few more things that I did want to talk about before the markets open. So the market has about 5 minutes to open. So let's go in and let me see if I can just find in some news or maybe talk about a few things that I had again in my mind. Their stock looks to extend gains, notch record high in remarkable 2025 turnaround. Nvidia could be a big story, man, this time. Okay, we're looking at almost close to a 6% move on Reddit, 5.83%. Remember, it's an exceedingly volatile stock. It can have 6 to 8% moves back to back, could have 10% down moves as well. So it's nothing out of the ordinary. And how many people, if you had a 40% weighting to Reddit in your portfolio, you would be making a lot of money. But you would also be thinking that maybe it's time to get out of this trade, right? We got MMAJ in the house. How's it going, buddy? You're right in time, 4 minutes for opening. So this is going to be fun. Let's see what else is happening in the market. Yeah, still steady for now. We're still looking at a good price on the Nasdaq. It's not looking like it's going to be coming collapsing down. So that is going to happen. At the moment, it does look like we are going to be seeing. So the Fed Chair Powell is going to be, he's returning to Capitol Hill for a second day of testimony. He is expected to face many of the same questions that he faced before the House yesterday. So that should work out. We're also going to be seeing Nike come out with their earnings today. So let's see how that plays out. So as of now, 22,280, 99 points higher on the Nasdaq. We're opening into bull market territory, all-time high territory. So in about 3 minutes exactly, you will see a new all-time high on the Nasdaq, on the triple Qs. I don't believe you will see it on the S&P 500. It would take a percent higher today on the S&P. If we can get that, we will close on the S&P 500 as well. Always remember, I do like seeing the fact of all of the indexes moving towards new highs. The Dow is about, I know it is about, it's not within a 1% range for sure. It's pretty further away. It's at 43,000 while the all-time high was at 45,000. So it's about 4.6% high from here before we do actually move towards the 45,000 level on the Dow Jones. Okay, great. So a few minutes more for the market to open. Let me see if I had anything else that I wanted to talk to you guys, especially about the fear of missing out, right? So I wanted to actually talk to you guys about this. Also, do remember that just because I've been so bullish and saying that because the markets do break into all-time highs, you should be buying today itself. No, you should not jump in with 100% off your money just right away and go and say, okay, we're in all-time highs. He said to buy. Let's just go buy. Don't fall in for retail FOMO. Think like an investor. Stagger your investments. Buy a bit. You see a pullback, buy some more. You see the market pulling back a little bit more, buy a few more stocks. Buy a lot more when you're seeing prices come in your favor, right? You are going to be able to see that. Retail investors often pile in after it's obvious that we're in a bull market. It's usually never the right time to do that. So don't fall for that trap. It's not something that you should be falling in for because FOMO is never going to lead to you to be a better investor. It's always going to lead to you to making mistakes. It is better to be cautious. Even though we're entering a bull market today, in about 45 seconds, we're going to be having an all time high. Celebrate it. Don't go in and buy 100% of your cash that you've been sitting. Stagger that, right? Buying headlines and not buying fundamentals is not the right way to think, right? So, like I'm saying, it's an all time high. Don't get into this concept saying I need to buy in before it gets too late. That's not how things work. The best way in way things work is stagger your investments, buy it slowly, but keep buying because whether it goes down, whether it goes up, you will be having an average dollar costed average price, which can then compound over time. That is more important. That is something that is going to lead to more amount of people coming in and buying the same stock that you have that you already own, which is when you're going to be making money. Substantial money is made by you when you're buying when nobody else is buying, and when you're selling when everybody else is currently buying. Remember that. With that note, the markets have opened. The Dow is down 6 points. The Nasdaq has opened in all-time high territory. So congratulations for everyone. As of this minute, the Nasdaq is in all-time high, 22,283. The S&P is at 6104. So that's about 0.2% higher. The Russell's down 0.1%. So that's not doing that well at this moment, but that's okay. It's just a minute into trading, right? For the first time since February, the Nasdaq Triple Q is now officially trading at new all-time highs. So congratulations to everyone that lived through this pretty much tariff winter and markets going higher. Just it's been crazy right now, but the markets are going to continue higher. So it's a bull market. Enjoy it. Aditya is in the house saying, hello, buddy. I'm not sir. Please don't call me sir. You're going to make me older than I look. I already know that I look old, but yeah, fair enough. Nice to see you in, Aditya. Hopefully you're joining in for my lives as well. So subscribe and come in for the lives. If you guys can hear me clearly, just drop in a chat saying that you can hear me clearly. Because there's a lot of rain behind me, so I'm not sure if you guys can. 300 on the Nasdaq, so we're up about 121, 120 points on the Nasdaq. So that's a big move that you're looking at. Perfect. Always, man. Wade Freedom is Mr. Dependable. I'm telling you. Absolutely. 52 points on the down on the Dow, 120 on the Nasdaq higher. Let me go see. So Celsius is down about a percent too. Reddit is up about 7.5%. That's actually flying at this moment. Let's wait for everything to settle out. We don't need to keep talking about prices. So let me see if we have something new coming up. The S&P is up about zero point 0.2, triple Q is zero point 0.4. That's the opening bell that rang. Dow Jones is unchanged, down about 45.50. So look at that as just being pretty much par for the course. Okay, what I was telling you was that retail FOMO is something where you decide, okay, I need, before everybody gets in, I need to get in, and usually that's when everybody's getting in. So you jump in and you're like, okay, now this is it, and I need to buy it. Not a great strategy. Scale in. Smart investors do something called as scaling in with patience. Buy some. It's not like you don't have skin in the game. So buy some. Wait it out. Wait for a pullback. You might break out a percent or two higher on the market and then reverse back down to the previous all-time high, which is a percent or two lower from the all-time high that you are currently seeing right now. Go in and buy then. Right. So scale in. Institutions don't go around chasing for stocks and chasing prices. They go around looking for periods of consolidation and then they buy. They usually start scaling into strength, especially on pullbacks when prices go towards moving averages that a lot of people look at or support areas. You go in and buy it at that time. Remember, professional investors do not go in and buy hype. The reason that they got professional is not because they went in and bought hype or they went in and did something with the fear of missing out. They basically buy pricing power, they buy earnings momentum, they buy when there is a lot of strength in the underlying trend of that particular stock. So remember that. That is something that you must always remember. Let me give you an example that I had written down. In 2021, you started having sector rotation. Tech was at its highest post-COVID boom. Retail kept buying Apple, Tesla, Zoom, all of these guys, right? What did the smart money do? The smart money rotated into value. They went in and bought banks, energy, and industrials, anticipating rate hikes and inflationary pressures because that's what happened. Eventually, rate hikes came through, inflation started spiking like crazy, and you saw the markets collapse in 2022. You had a massive bear market that came in. Energy was up 50% in 2021. Financials were up only 32%. While many pandemic darlings, right? You had Robinhood and all of that that are currently trading at 80, $82. They were down and out. They were in single digit $5, $6. So pretty much remember that just because everyone's buying it doesn't mean you should buy it. Just because we're at all time highs doesn't mean that you should start selling. That's no reason to sell as well. All time highs, they don't mean anything as a situation that just because you're in an all time high means you buy anything that's going up and you'll make money. Usually it feels that way. Sometimes when you do it, it will feel that way and you will see like, okay, I'm making money. This is happening. This is working for me. It's usually a time to start rotating and rotate smart. Don't chase for the next stock that's going to double or triple just because it has already done it. Sometimes it will and it will suck you in. Remember, the market, she is the best humbler that you can find. She will humble you better than anybody else in your life has. So always remember to respect her because as much as she can give to you in terms of returns, she can take it all away at the bat of an eyelid. So remember to be humble in this whole process because today is a day that most people's portfolio would be hitting all time highs, possibly, or maybe not, but at least closer to the previous highs. Do not get fooled into the fact that you're doing great. Remember, the only way you're doing great is if you're beating the index, you're beating other people's returns. This is a dog eat dog world when it comes to capitalism. Do not try running this thing where you're trying to match up to the Jones on the opposite side and the families on the opposite side and trying to see grass is greener there just because you see a smile on their face. Maybe their portfolios are in the red and they like putting on a farce. Stick to your circle, stick to your circle of competence, stick to what you're good at, and stick within an adequate return. Do not expect to double your money every year, every 6 months, every 2 years also. Get a 25% return, 20% return. If you can achieve that, you're doing far better than most institutions are. You're doing far better than most people could ever imagine to be doing, right? And take this from me, I have been doing this for about 13, 14, 15 years now, over 15 years, 14 years almost. Don't fall into the trap of trying to measure yourself with someone else, right? This is not a dick measuring contest that's going on here or an account balance contest that's going on here to see who's bigger and who's smaller. This is purely a game that you're playing against yourself. If you can handle drawdowns, you will be ready to deal with the upside moves. It's plain and simple. There's nothing more to this, right? Let me just go over and see what's happening with the market. So the Dow is down about 18 points, so it's recovering a bit. Nasdaq is up about 125. So you are seeing a substantial move higher there. It is picking up. The Russell is down about zero point 0.2 and the S&P is up about 0.22% as well. The bond yield is down about 0.56%. So that's actually pretty good to see, right? Chime, one of the stocks we're looking at, up about 1.24%. Most stocks are flat. Lemonade, a stock that I look at in insurance technology using AI, is down about 2.6. Some stocks are down. The Russell is down. So you're looking at that being weighed heavily on these stocks. I think you are going to be seeing, what is it, Nike coming out with earnings today after close. So let's see how that plays out. Let me go and see what's happening with commodities. How's that playing about at this moment? Do we have anything going around there? It's pretty much dead. I mean, the markets are currently just dilly dallying. We're only in about 8 to 10 minutes, so it makes sense to look at this post market. I'm not a guy that is a fan of looking at markets during trading hours. I don't trade during trading hours, so it's not really worth, according to me, to just sit and show you charts and keep telling you prices every 15 minutes. Let's see. Let's see. Do we have anything else that's currently going on? Anyways, for all of you that are like pretty much new here, please go ahead and subscribe. Go ahead and notify yourself so that you guys can get to know that markets are all about coming on live with us. So it's going to be fun for us. Anyways, so enjoy yourself. I appreciate everybody that's coming in here. Make sure you guys have a good Wednesday. Enjoy the bull market that you have today. At least the fact that we've opened in the green. Let's see if we continue. And if we do head towards 22,400. So let's see. Anyways, thank you for tuning in. Enjoy your day. Have fun. Most likely, we'll be doing a post market tomorrow. So, hope to see you guys for that. Enjoy yourself. Have fun. Thank you so much.